Chapter 8: Determining the Cost of Labor. In this chapter, you learn to calculate the cost of labor, including the cost of wages and the cost of burden. The labor burden is the associated cost of the employer paying on behalf of that employee for things like Social Security, Medicare, unemployment tax, etc. First, let's classify the employees as exempt and non-exempt. The exempt employees are the ones that are exempt from overtime. In other words, they do not get any overtime for their work. Those employees are typically management employees receiving a salary, such as company executives, company owners, administrative and professional personnel. The non-exempt employees are the ones that are entitled for overtime pay. Typically is time and a half for every hour worked beyond the 40-hour work week, and that would be the tradesmen or trades personnel that fall in this category. The cost of labor not only includes the wages paid to the employee, but also the expenses paid on behalf of that employee by the company, such as cash allowances, payroll taxes, which include Medicare and Social Security, unemployment insurance, workers' compensation insurance, general liability insurance, insurance benefits, retirement, assuming that the employee gets insurance and retirement benefits, and potentially union payments if we're dealing with union trades, and vacation payments, again, if that employee is entitled to vacation. The hourly cost essentially allows us to calculate the total labor cost. Just using that simple formula, hourly rate times total hours worked, we can calculate the total labor cost. When we use the hourly rate, we need to use the total hourly rate including the employee's wages as well as the labor burden costs. Again, the labor wages can be classified as hourly or salary. In this case, we're going to concentrate more on the hourly wages for construction trades personnel and salary wages for management personnel. That would be, for example, the salaries of a construction superintendent or the salaries of a project manager, who normally get paid on a salary basis, typically once every 2 weeks or once a month. The hourly paid employees will get paid on a weekly basis. For hourly paid employees, we essentially have 3 different market rates. One is the open shop rate, the other one is the union rate, and the third one is the prevailing wages. The open shop rates are essentially non-union. The rates are established by the market, whereas the union rates are established on the labor agreements between the construction company and the labor unions. The prevailing wage rates are based on a federal mandate under the Davis-Bacon Act. This is a federal law that was passed many years ago, back in the early 1930s, which essentially says that any construction project that receives federal funding is subject to the Davis-Bacon Act, which establishes hourly rates for all the trades, all the mechanics, such as carpenters, laborers, pipe fitters, plumbers, etc., at the job site. These prevailing wages are established by the Department of Labor of each state, and this is public information that can be accessed easily through each state's Department of Labor. The burden costs essentially are all the costs paid by the employer in addition to the wages, again, on behalf of that employee. These costs include cash allowances. Cash allowances may be paid for personal vehicle use or tool usage of that employee. If that's required for the employee to bring his or her own vehicle or tools, the employer may recognize a cash allowance payment for that usage. The allowances or cash equivalent allowances are also subject to payroll taxes in the same manner as wages. Under payroll taxes, we have Social Security and Medicare. Okay, the Social Security and Medicare, they both fall under the federal mandate. Also, under federal and state law, we have unemployment insurance. These rates vary from state to state. You can refer to the examples in the chapter to see some of the rates applied in these examples. Workers' compensation insurance is also one type of insurance that is paid by the employer, and the rate applied to the payments on behalf of the employees depend on the experience modifier rate, or EMR, which is essentially a rate established by the insurance industry on companies for the last 3 years of losses. So their number of claims on workers' compensation insurance will have a determining factor on how much insurance that employer pays. General liability insurance is also expressed as a percentage of the wages, and it typically varies depending on the worker classification. So, for example, the general liability insurance of a site work contractor could be higher than the general liability insurance of a painting contractor, in the sense that the highway or site contractor will utilize heavy equipment, machinery that could potentially affect the work of others as a higher risk in terms of, we're talking about in terms of risk here. If the employee gets insurance benefits such as health, dental, or life, certainly the employee may pay a contribution to those benefits, but also the employer most likely will pay some amount of money towards those benefits. In the case of retirement, such as for a 401k plan, the employer may also pay a contribution on behalf of the employee. Union payments, in the case of union payments, certainly they may be in lieu of the benefits, but union payments typically cover the expenses of training, pension, health insurance, and some unemployment insurance that unions may carry on behalf of their members. So certainly that is also an expense that could potentially affect the employer. That is essentially the end of this chapter. We've mentioned how the total cost of labor will affect the construction company, not only in accounting the wages, but also in accounting the those additional expenses that are called labor burden. Thank you very much.